Welcome back to Strongman Personal Finance. Are you a soy boy? Did you buy a bunch of soy boy stocks because you thought soy, weak men, losers, dare I say, pussy boys, were the future? Well, guess what? Obviously, you were freaking wrong. Now, if you haven't heard the news, you little soy boy stock buyers, think you're better than me because you buy soy? Well, I just bought every single steak stock that I could just to dominate you soy boy shill losers. Every single soy stock got freaking annihilated over the last month. And I mean every single stock. Now, we all know, on my channel at least, other channels like whatever, it's the future, buy the stock, oh my god, it's the future, bro! That's other channels. On this channel, we look at the fundamentals of the company. That's the financial statements, not the balance sheets, Jeremy. The financial statements, and we project revenue, profitability, free cash flow, and we use our discount rate to find out the intrinsic value of the stock based on our required rate of return, whatever your return is. Now, all of these stocks, Beyond Meat, Tattooed Trucker's Nutsack, thanks Jay Nagy, Oatly stock, very good food company, they've all been annihilated because they are money-bleeding piles of freaking trash, okay? This reckoning was a long time coming, and I'm glad that it's finally happening because there have been so many times where I've talked about these stocks, and these freaking soy boy shills come onto my channel, and they tell me I'm stupid because I don't buy a stock like Beyond Meat that is massively unprofitable with disgusting food, okay? They call me stupid. Well, look what frickin' happened today. Beyond Meat went down by 15% over the last month, and it went down by 11.8% today. That is frickin' annihilation. Now, a lot of you clowns are going to buy the dip. That's stupid. And I'm going to show you why. So let's read this article from CNBC, if the frickin' ad block or whatever doesn't show up. Beyond Meat stock stumbles to 25-week low after lowering third quarter revenue outlook. The company said it now expects to report net sales of $106 million for the quarter, down from its forecast of $120 to $140. Number one, never trust management's assumptions. You have to have your own assumptions because management's always going to paint a rosy picture of their stupid company so they can elevate the stock price, they can exercise their stock options, or they can raise more money by issuing shares when clowns like you go and buy it. Beyond said that a number of factors hurt its revenue, including Delta variant, of course, the Delta variant. It's not because your food's freaking garbage. And severe weather. Okay? Blah, blah. Shares went down. Blah, 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 blah. Beyond shares fell 14%. They blamed lag in sales. See, look. The company said multiple factors caused the lag. Keyword, lag in sales. Okay? It wasn't the COVID... Oh, can I say that? The virus Delta variant. It wasn't that. The food is freaking disgusting. Okay? Nobody wants to pay a fortune for this overpriced garbage that tastes like freaking crap. I just did a video reviewing their sausage. It was horrifically bad, okay? Now, I can look past that, you know, if the stock's actually profitable, because maybe even though I don't like it, maybe other people will. Well, it's always good to look at the financials of a company, okay? Maybe we can figure out why this freaking stock crashed so much. The only thing that is positive on this set of income statements, this is the income statements for Beyond Meat from 2017 to 2020, is revenue growth. That is the only positive thing that I see. What do I also see? Negative operating income, except for a fluke year in 2019. That was probably for a special charge. Every year, negative and increasing operating income, okay? Pre-tax income, even freaking worse. That means they're paying a lot of interest. That's the difference between operating income and pre-tax income is how much interest they're paying. And of course, net income. So basic earnings per share has basically been trending worse and worse and worse and worse, okay? And of course, you look at the basic average shares outstanding, it's been going up, especially in 2020. They issued a crap ton of shares. So the company's unprofitable, it's growing its losses, and it's issuing shares, diluting the current stockholders. How many times do I have to freaking say this? But you freaking losers come on my channel. You don't understand growth. Screw you. Look at this. Operating cash flow. Statement of cash flows. You know what that is, you freaking losers? Statement of cash flows. Operating cash flows negative and increasing. Financing cash flows very positive. They're financing with either debt issuance or stock issuance. One dilutes the shareholders. One leads to increases in interest expense. Okay? You have to do one or the other. Holy crap. This company's freaking garbage. So even a small, well, this isn't a small change in revenue assumptions, but a tiny thing can freaking annihilate a stupid company like this. And this needed to happen because I'm sick of these stupid stocks. The next stock, Tattooed Nutsack. Now, I make a bunch of videos making fun of Jeremy LaFufu, but it's for a good reason. He tells people to buy stupid freaking stocks. Over the last month, this stock has gone down 11%. And, oh wow, it's actually even over the last 6 months. This stock just goes up and down, up and down, up and down. This stock's been getting freaking annihilated for at least a couple months. Jeremy LaFufu is on freaking life support. It had a high of 24 on September 2nd. That's probably when LaFufu YOLO'd all in. And now it's down to $17.56. You may be thinking, maybe I should buy the dip. Let's go look at the finances, okay? I believe Tattooed Nutsack's actually doing better than Beyond Meat, but Jesus Christ. So, they also have revenue growth, okay? That's the one positive thing about Tattooed Nutsack. Gross margin, I believe, has been going down. You can check on Morningstar for that, which is actually a really bad thing. And I've actually been to Walmart, and I've seen how Tattooed Chef, their products are really deeply discounted, which means the company's margins are probably really, really low. Because Walmart has got to make a profit, so if they're going to charge such low prices, they're not going to pay that much for Tattooed Nutsack, okay? Just keep that in mind. Or they lowered the prices because they weren't selling, even though LaFufu thinks, oh, they're selling, yeah! We'll see about that. So, what's also bad? They had one profit, which is probably from some kind of random accounting, gain, in 2019. And then ever since then, it's had negative and increasing operating losses, all right? This is important. Okay, basic average shares outstanding. Well, that's going interesting. It went down. Let's go look at the statement of cash flows. Operating cash flow, that's their cash flow from operations, down, 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 and increasing. Financing cash flow, up, up, up. So they're going into more debt, they're issuing more shares, and they're losing freaking money from their core business. Freaking disaster, okay? Free cash flow, negative, 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 and increasing. I mean, come on. Oatly stock. Ooh, Oatly! I don't know crap about Oatly, but I hear it's a bunch of soy boy garbage. Swedish food company that produces alternatives to dairy products from oats. This might not be super soy, but holy crap. Let's see what their financials look like. Let me guess, they're freaking garbage. I don't care about the stock price, okay? You freaking clown. Oh, the stock went up, buy it. Shut up. All right, revenue growth, that's positive. Operating income, negative and increasing. Losses, negative and increasing. Wow. Earnings per share, negative and increasing. Cash flow, come on. Negative cash flow from operations and increasing. Financing cash flow, positive. Free cash flow, negative, 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 and increasing. So over the last 12 months, they had negative $323 million in free cash flow, as opposed to $528 million in revenue. So their negative cash flows is almost as big as their revenue. I mean, there's probably about a 40%, 50% difference there, but that's just revenue. Okay, revenue is not profitability. This company's freaking losing money. And last but not least, the worst of them freaking all, very good food company. I told y'all not to buy this freaking garbage because there's nothing underpinning this company. But y'all go and listen to Ryan Scribner, a freaking loser with man tits who's fat and stupid and gets paid to freaking shill stocks like this. And look what happens. Now it's down 21% over the last month. But Ryan Scribner has more subscribers. God, I'm so sick of you freaking people. Let's go look at the financials. Did y'all even do that? Or did you just listen to Ryan Scribner's stupid freaking presentation where he got paid to shill the stock? Total revenue. Revenue's going up. Operating, oh my God. These margins are so horrible. So revenue went up by about 2x between 2020 and over the last 12 months. So roughly 2x. The negative operating income went up by about 3x. So They're actually increasing their losses as a percentage of their freaking revenues. But that doesn't matter because Ryan Scribner has a lot of subscribers and you don't, strongman. That's your stupid freaking Wall Street Bets clown logic. So sick of you people. Operating cash flows. Boom. Negative, 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 increasing. Free cash flow. Negative, negative, increasing. Financing. Increasing, 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 increasing. I'm so sick of this, okay? Y'all see why I'm so angry? This whole world is just going insane. The clownest, most stupid stocks are the ones that people are buying because freaking losers on YouTube, like Jeremy LaFufu, blah, 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 Ryan Scribbles with his man yeah, I'm Ryan Scribner, I got a little dork tattoo that's basic. Bunch of freaking losers. All these stocks are going up because these idiots are getting paid to shill them. So what's the whole point of this video? I just wanted to show you how freaking right I was. You know, sometimes I can be right. These stocks are garbage. Don't buy the dip. I don't care if they go up because a bunch of other clowns bought the dip. Look at the company's fundamentals. Is it profitable? Is it moving towards profitability? Or is it increasingly losing money every freaking quarter? That's what matters in the long run. Don't listen to these freaking losers on YouTube that tell you otherwise. That's my rant for today. Screw Beyond Meat, garbage food. Screw Tattoo Nutsack, overpriced, not going to fill you up. Screw Oatly, because it's Swedish. A very good food company, like holy crap. I've never seen something more disgusting than this company. Anyway, that's it. Like, subscribe, tell your friends about me. Y'all have a wonderful day. Choo!